Hello, I'm Jo Price and welcome to FinextraTV. We're in our virtual studio today and joining me are David Ruis and Anthony Nonnis, who are talking about the lending and banking institutions and the financial landscape of that in 2025. Thank you both for joining us.
Thank you, Jo.
What can you tell us, first off, David, if you don't mind, about the big trends of 2025 that you're witnessing within the banking landscape?
Yeah, thank you for having us, Joe. It's great to be here. I think a couple of the trends to highlight is I think maybe some of the trends that we've been talking about for a few years are actually materializing. So we see fintechs and non-financial institutions finally entering the market. We really see them using alternative manners of reaching those clients, much more digital, embedded in third-party channels instead of in the own banking channels. So that leads to a complete new dynamic and to a complete new set of requirements for the financial institutions themselves to really make sure that they can capture that market. I think the other really big trend to notice and to discuss is, of course, AI. We can't talk and we cannot not talk about AI. And I think in this case, that's really very much applicable as well, both in finding the right clients, but also in really doing the credit scoring. The amount of data that can be processed is significantly bigger and can be so much more easily processed and used to do any form of credit scoring that goes far beyond the traditional old school data points like yearly figures and so on.
Okay,
I
thank you.
think very interesting times.
Good. Anthony, would you agree with that? And what particular trends have you witnessed?
No, because I think David's sort of captured the key trends that we're seeing ourselves. I suppose probably the only difference from our perspective is, speaking to customers about their digital transformation, I think there's a high demand for agility and scalability. So there is a move away from kind of the legacy platforms, so probably a bit more of a modular approach. So that's one of the trends we're starting to see. I think we're seeing banks being a little bit more open to the concept of what we call composable architecture. So, their ability to enter new markets, new segments, to follow new trends or offer new products in a faster, more efficient way means that they've got to be a lot more agile and actually, work together with different fintechs and elements within the ecosystem to bring that together. I think the other trend we start to see in a big ramp up literally in the last probably 18 to 24 months is embedded finance. So actually, moving away from your traditional banking and actually bringing financial products to the point of sale. So we see there's a big growth area in embedded finance and areas such as buy now, pay later. I think is a really big, interesting growth area for us. And probably the last one, I suppose, we talk about the overall change in banking experiences just beyond lending, is probably hyper personalization. I think what customers are looking for is how do we get to them quickly, what they need, and now. So I think that's the trends we're seeing across the board.
Great, thank you. I think you've touched on that already, Anthony, but anything more to add of what the main headlines are as we're moving forwards, really, throughout the rest of the year?
Look, I think probably one of the biggest headlines, which David hit upon again, which was AI. I didn't want to repeat him, but I think that's definitely, but driving from leveraging the data you've already got and how to maximize that, but also operational efficiencies. So there's kind of two kind of core reasons there. And the other one that we haven't really talked about is regulation and how regulation is driving the need for scalability. It's also driving the need for things such as open APIs and API connectivity. Because as we look at the feeder regulation coming through, and even if we look back at open banking, that ability for companies to provide that data and that access can only be done by APIs. So they need to really embrace platforms that open that API connectivity.
Thank you. David, if I could come back to you now, perhaps expanding on those headlines for the rest of the year, but also as we move forward, what are the challenges currently and any surprise obstacles that we may come across?
I think the biggest surprising obstacle, of course, is current geopolitical climate, which leads to bringing it more back to the different geographies. That means that looking at the usage of the hyperscalers, what are the alternatives that are more locally driven, especially for Europe, that's going to be quite a challenge how to apply that. So it is great to see that we are moving towards a more API and AI driven world, but how can that be sourced if that's done from a European perspective or other geographies? So that's going to be very interesting, and a big step up needs to be made there to make sure that that's feasible towards the future. Yeah.
Yeah. David, if I could just get you to expand on that a little, what does that actually mean for the clients within the industry then?
So that means that clients will really need to build up their local capabilities much more significantly, and diversify maybe from where they have been building up the capabilities over the past few years with the US-driven hyperscalers. And that's going to be a challenge. I think there's outside of the US quite a gap to be filled in terms of where is the technology going to reside and how are we going to leverage that. I think in line with what Anthony said, the regulations will also ask them to do that more locally. So that's with a low interest climate that we're moving towards, going to put more and more pressure on the one hand, you need more investments in the local geos, and there's less money available. So that will be a very interesting climate to navigate.
Anthony, if I could come to you on that, please. Would you consider the Euro political climate to be an obstacle, a challenge currently? And what does that mean for clients in your mind?
No, I think David summed it up correctly. Data sovereignty is probably one of the biggest challenges faced, but also competing regulations. There isn't a standard regulation across Europe, so each country has their kind of their own interpretation of that. I also think, as we kind of look at the new age, the barriers of entry for new suppliers are a lot lower than previously. So there's actually a lot more competition. So your traditional players have a lot more sort of compressed margins through the operating of a legacy, and you've always got newcomers coming, new fintechs offering similar products at a lot lower cost point. So I suppose our role here is to help both the legacy to adapt and compete, and also to help the new entrants to be able to actually offer those offerings in a quick way. But I suppose at the end of the day, we surveyed about 100 SME lenders, 1,000 SME lenders globally, and the feedback that we got from them is that 92% are prepared to switch vendors if they can offer something different, something exciting, something unique for that particular market. So I think that's something that basically banks and non-banks need to look at, is how can they be offering new exciting products and start personalizing them for those markets.
That leads on actually quite nicely to my next question, was what advice would you give to financial institutions for the rest of this year, 2025, in order for them to be competitive in the lending landscape? Anthony.
Look, I think basically it's almost an adapt or adopt or die type. I know it sounds a bit dark, but at the end of the day, I think they need to embrace the change. And I think as David, eloquently explained, cloud infrastructure is here to stay. It gives the ability to address the concerns of data residency, because most of the cloud providers today actually do offer cloud residency, and that we are seeing some moving to a European sovereign zone to address some of the challenges within this market. So I definitely think you need to be adopting probably more of a cloud-based strategy. I think you need to be embracing the concepts of API. And how you access, so David referred to AI, generative AI, and how we can be leveraging that. In order to leverage that, you need to be able to access and integrate with those systems. So and integration can be quite a costly exercise. So by leveraging APIs to actually get the right integration, I think that's going to ensure that they can adapt quickly and they can scale in a secure fashion. I think that's one of the advantages also coming with adopting cloud, is that security and scalability that offers to them. I think that's probably the main thing. And again, back to that personalization. How do you actually tap into new markets and understand what they need and how to adapt and actually build through an ecosystem of fintechs the ability to address that market?
Thank you, Anthony. And David, would you add anything to that as far as advice for financial institutions as we move forward through the year?
Yeah, I think the other way to frame what Anthony is saying is buy capabilities that are not banking capabilities, but more technology capabilities. I mean, financial institutions and other banks alike you're a bank. You're all about risk management, pricing that risk, and so on. You do not per se need to be a tech company, because those technologies are available in the market at significantly lower cost in significantly less amount of time in order for you to develop it yourself. So I think the beauty of nowadays is you can acquire it, go for it, instead of thinking that you need to do it yourself. And that is typically what we see with the incumbent banks, the biggest challenge, that they think they need to do it themselves still, which is not the case anymore.
Okay, thank you both, Anthony and David, for joining us here on Finextra TV. And the future sounds bright and positive. Thanks for your time.
Thank you.
Thank you.